I want to talk about the big news that dropped a couple weeks ago on X. You're like, which big news? Lots of big news drops on X these days. It's where everyone goes to get all the big headlines. But I'm talking specifically about Bill Pulte announcing that FHFA, Fannie and Freddie, will soon be utilizing the Vantage credit score. And oh boy, this sent the whole mortgage industry into a bit of a panic and also a little bit of excitement. I'll be honest with you. And I'm going to talk about, what's good about this and what are the potential pitfalls and concerns that you might be looking for. But that was kind of out of nowhere, right? I mean, just. Bill Pulte announced we'd be using the Vantage credit score, and everyone's like, well, what does that mean? Like, when do I need to be prepared for this? How are we going to implement this? So many more questions than answers, right? And it's kind of like just poking the hornet's nest. I don't know why they do things like this. It seems to be a theme of the current administration, but hey, nonetheless, it's like, let's start with the big news, and then we'll figure out the details a little bit later. So this was a couple weeks ago. And I guess the first thing I would say is, I personally am excited about this announcement. I think this is a good thing. I'm going to kind of walk through with why I feel that way. But secondly, I would say is like, let's all take a deep breath, because I think every mortgage company is already prepared to do what they need to do when the time comes to implement this. But there's a lot that has to happen on the back end before you see a full implementation of this. I mean, we're talking about, there may be changes to how this impacts pricing, right? Like, do these credit scoring models have such a different impact than the current FICO score model that we're using that there needs to be changes to, things that are based on credit score, like the loan level price adjustments. Like, how much is it going to impact loan level price adjustments and the revenue that's generated from those? I could imagine there will be an impact, and there may be modifications to things like that. The mortgage insurance modeling, right? We're a purely risk-based mortgage insurance at this point, and it's all driven by FICO score. Will these credit scores, be different enough that they need to make changes there? So anything that's kind of risk-based within the mortgage space has the potential of being disrupted as a result of this change.